Okay, so this is Monday, the 16th of July, 2018, and Netflix is about to report earnings after the hours. I'm recording this video at 6 o'clock in the morning. At 4:05 p.m. roughly today, Netflix is going to release its earnings. Now, of course, the sentiment on Netflix has been extremely bullish, but here's why I think it's going to drop roughly 40-50 bucks after the earnings announcement. Now, ideally, I like to short some of these stocks for buying put options when they actually go higher. So I'm quite sure the report is going to be very good. I'm quite sure it's going to beat the earnings expectations once again, as it has been over the last 27 quarters. However, I don't think we're going to see the typical reaction that we will see in Netflix this time. So in my view, it's actually going to take a dive all the way to this line of about $360, possibly all the way to $340. Now, the only question that remains is, will it initially today, because we don't know exactly where it's going to trade throughout the day today, so maybe it's going to pull back to 420 and then drop 50 bucks, so they'll put it at about 370, right? Or if it during the entire trading session today it's going to stay between, let's say, 390 and 405, then if it's going to dive 50 bucks, it's going to end up roughly at 350. So, but these are the price targets for today. I know pretty much everyone is unanimously bullish on the stock, but here's some of the things. And again, some of these go like very, very basics. The first case of divergence here, as the stock reads what appears to me a clear double top. So here's your top number one, here's your top number two right here. The RSI, the strength of the stock, when it was reaching the level of 420, 423 the first time around, it was quite high. It was actually close to 90. It was like 86, 87 on the RSI. This time, the second time around, it tries to break for this 420 range. The RSI is way lower. It's in the 60s. And so with the last couple of days sell-off, as you can see, the volume is increasing significantly. In other words, that tells me that the investors are getting concerned going to the earnings report. They have some reservations. That is not typically the behavior that we would observe in Netflix stock going into the earnings. Now, of course, that could slightly change today. Maybe they'll bump it up $10, $15 higher from where it closed on Friday. At the same time, we're seeing that the MACD is actually taking a nosedive right here, and that's clearly a bearish thing. Now, I love this accumulation distribution because everybody and their mother-in-law has been buying the stock, right? So at some point, they're going to have to sell. And for those of you that may be new to trading stocks, to trading options, just a few years ago, Netflix actually did a stock split. And so it went from literally 60 bucks to about $740 a share, and then it did a 7-to-1 stock split. So guys like Mark Cuban were buying the stock when it was before the stock split. It was at 320 bucks. So if that stock split never took place, Netflix would be one of the most expensive shares traded, period. Probably besides Berkshire Hathaway, that would be the second most expensive stock. It would currently be trading at $2,900. So the question is, those guys like Mark Cuban that did buy the stock at $320 before the split, would they be interested in selling, coming in and finally taking some profits when the stock is trading at $2,900 a share? So that's the question to answer, number one. The question to answer, number two, is why do it now? Why not do it, let's say, as everybody views the stock can go considerably higher, as they say 500? Well, if Netflix reaches the price of 500 without that stock split, that 7-to-1 stock split, it would have literally meant that they're predicting Netflix will go to 3,500. So why do I think that's actually not going to take place, or at least it's not going to take place this quarter? Well, I'm observing a lot of selling between this level of 390 and 420. As you can see, if you pay attention to these red bars right here, at the top, between these two tops, I'm seeing a lot of selling. I'm seeing a lot more people are interested in selling their shares at this level rather than buying. And considering the accumulation distribution is at all-time high, that tells me that once it reports earnings, no matter whether the earnings are going to be good or bad, there's going to be a lot more selling pressure coming into the stock. And that's why I believe it could easily drop 40, 50 bucks. Now, it's nothing new for Netflix to drop 40, 50 dollars. I know some of you may say, well, you know, in the last few quarters in announced earnings, it really did move a ton, maybe 20, 30 dollars after the earnings report. You know, why 40, 50? Well, historically speaking, right, I mean, there have been days before the stock split. For example, I remember Netflix dropping from 440 bucks all the way to 320. And that's when Mark Cuban actually publicly came out on CNBC and he said, okay, I'm buying a bunch of Netflix stocks right here. And so Netflix stocks started rebounded. Before that took place, Netflix was trading, I remember, probably a couple of years prior to Mark Cuban building a big position in it, was trading, I remember, dropping on earnings announcements from 390 all the way to 300. So it actually has, in the past, a history of making significant moves. So I think $40, $50 move is actually not even going to be a gigantic move for Netflix. It's going to be quite a reasonable move lower, a readjustment, heading back to, you know, it's still going to be an uptrend, but I think it's just going to be an inevitable, immediate, short-term reversal. Again, some of the indicators are pointing out to that, but looking at the bigger picture, there's a simple law in economics. It's the law of marginal supply and marginal demand. In other words, the story with Netflix has been as such that buying and investing more money into content, which has been quite costly for Netflix, has been generating, as a result, as an outcome, a pretty substantial growth in the subscriber base. Now, the law of marginal supply and demand states this. Just imagine if you're hungry, let's say for a burger. Well, you eat one. How hungry are you for a second one? Well, probably not as much as you were for the first one. Well, let me ask you this. After eating 5 burgers, or let's say you're just a total burger fanatic. Let's say you've eaten 15 burgers for the day. What is your desire and what is your craving for a burger number 16? Okay, it's not going to be very high. As a matter of fact, you're probably like, man, the last thing I want to do right now is even look at another burger. Well, the point here is this. At some point, getting more content, getting more and more and more and more content is not going to equate to a larger and larger and larger subscriber growth. Because, you know, there's only 24 hours in a day. Human beings can only, you know, if they were to binge drink Netflix per se, and, you know, let's say they didn't do anything and they just watched it for 24 hours. There's only so much content that the human being can absorb within a certain amount of time. So the law of marginal supply and demand, I think at some point is going to kick in. And because the expenditures are so ridiculous for the company spending billions and billions of dollars acquiring that new content, if we are getting close, and I think this heavy selling around this price range is clearly showing some concern that maybe we're getting to that point. Maybe the laws of economics are finally going to apply to Netflix, where the law of the marginal supply and demand is finally going to not necessarily accelerate the subscriber growth as the new fresh content was able to do it and accomplish that so beautifully over the last few years. So could the international expansion actually slow down? I think there is a great probability of that. But overall, am I bullish on Netflix stock? Yes. Am I bullish on it going into the earnings today? Absolutely not. I think there will be a healthy pullback. As a matter of fact, I would not be surprised if we saw the shares of Netflix falling all the way from the 400 level within the next couple of months all the way to 300. Because I think the 300 level may be right under, maybe 290s, where some people would actually be willing to entertain the idea of establishing some big positions and coming in and buying the stock. I think regardless of how well these earnings report is going to look, we're going to see a huge number of sellers. Again, from the standpoint of trading options, there is 2 perspectives here. The earnings could be great. The earnings announcement, I think, is going to be great. With that being said, just because the news is positive does not mean the stock is going to go higher. Because during the earnings announcements, that's when you have a huge supply of stock and a huge demand. So a lot of banks actually as they use this term, and I'm sure most of you have heard it, it's sell into the strength. So if the earnings report is strong, then I think there's going to be a number of sellers willing to come in and take some chips off the table right around these price levels. So if you're actually trying to trade Netflix, you probably, if you watch some of my videos, I never recommend buying options prior to earnings. What I do suggest is to actually pay attention to the reaction of how the investor is going to react to the earnings. And the number one initial reaction could be this. Netflix price could go from wherever it's going to close today, let's say initially to the 430 or 440, right? Or maybe just revisit simply the 420 on great earnings report. But after that, tomorrow morning, which is Tuesday, the 17th, we will see a huge sell-off in Netflix shares by the end of the day. So I'm not saying that the immediate reaction, the immediate sell-off is not possible, but just don't forget, because of the type of stock that it is, and because of me really observing it the way it's been traded years ago, I think once it's in the behavior of the stock to actually rocket higher after hours or pre-market, and it has a high probability of reversal in the past, which Netflix did do that multiple times in the past, I think if it goes higher in the morning, it will still have a high probability of selling off by the end of the day. And if that sell-off begins on Tuesday, then I think that sell-off will ultimately continue into Wednesday and possibly Thursday until the stock reaches its level where the investors are going to perceive it to still be a value at which they would be willing to commit large amount of capital. So let's say it's going to be 340 or 350 range, or ultimately it could be lower than that. But I'm basically saying I'm expecting a pullback. That's how I'm positioning myself. I will be buying Netflix puts on Tuesday morning. The strike I can't give you right now because I'm not sure exactly how the market reaction initially will be, but I am in favor of the market reaction actually overall being on the downside. After the earnings report releases, we may see a spike higher, followed by a huge sell-off in the stock. So I would actually wait for that best moment. If it does go higher on Tuesday morning, I would start to see, I would start to expect a reversal taking place maybe by 10:30, 11:30 in the morning, and continuing through the end of the day. So my position would be to buy put options as Netflix shares are possibly going higher. Now, what if Netflix shares actually start dropping right away after the earnings announcement? Well, that is the second case scenario. And at that point, I think it's just going to find that level. Maybe a short bounce all the way to 320, 330, and then maybe a $20 bounce from there all the way back to, like, let's say 350, 360, where it's going to maybe start sort of trading sideways for some time. So the question is this, however, if Netflix price does drop, how will it impact the rest of the FANG stocks? And in particular, one stock comes to mind, because if we look at all the FANG stocks, Apple and Facebook, they don't trade at very high multiples, right? But the two stocks that trade in the FANG, among the FANG stocks at the highest multiples are Netflix and Amazon. So I'm saying if Netflix falls by $50, I would also expect Amazon, and even though so far pre-market this morning, all the FANG stocks are looking to go higher, Amazon is actually trading at a record of $1,823 a share pre-market. I think it's one of the best opportunities to short that thing as well, because if Netflix stock falls, it's negatively going to impact, just like the domino effect, all the FANG stocks. Now, I'm not saying if Netflix falls $50 that all the other stocks are going to fall by a similar percentage, but let's say Netflix falls 10, 12%, 15%. Then I'm expecting Amazon to also fall by 3% at least. Now, if you look historically at the Amazon price announcements, and let me just bring Amazon here to light real quick. what we have been observing is in the past, when Amazon has done their big sale event in July, and it's different dates, right, in July, but similar results. The stock, as you can see right here, runs up significantly from 1700 all the way to 1813. Again, pre-market today it's at 1823, but it has always done that in the expectation of the event. However, typically after the sales figures are announced for that big sale day, which now turns out to be more like a day and a half, they added some extra time to the sales event. So of course, naturally, the numbers are going to be bigger. But Amazon historically has always reported great sales numbers, right? That's never been an issue. However, it did not stop the stock from selling off if we look at it historically. Considering the significant run-up recently into this big sales day, I think when the report is going to come out, we will actually see Amazon shares pull back. So I actually have two catalysts for the Amazon stock to go lower rather than higher. And I know this sounds probably like a crazy call, especially when the markets look like they're about to break out to all-time high, look like they're really catching some momentum, look like, everybody's on board full blast on Amazon again, buying it higher and higher. But to me, it just represents a great opportunity where I can come in and I can buy Amazon puts relatively inexpensive, especially the puts for this week, guys. And the reason I say this week, well, they're not inflated yet by the Amazon earnings announcements, which are going to take place the following week. If we go back to our Netflix example, and we use Netflix as sort of our guide to how the rest of the FANG stocks are going to be trading throughout these earnings season, well, we have clearly seen just a few days prior to Netflix going into the earnings announcement today, we had a lot of investors coming in and selling the stock. So regardless of this stratospheric rise here in the shares of Amazon, I think there is a huge possibility of Amazon shares actually pulling back going into the earnings announcement if it's going to repeat the behavior of Netflix. So what do we have? Well, so far this morning, some other financials are reporting some pretty strong earnings, but they're not heading higher. Where am I going with this? Well, if Netflix drops by $50, that means all the FANG stocks are going to correct slightly. I'm not calling for necessarily a huge crash here, but if all the FANG stocks were to correct this week, then the market is not going to be going to an all-time high this week for sure. Okay? Specifically on Amazon, we have a situation where historically after announcing great sales numbers, the stock is going to pull back. On top of that, we have a situation to where it's been the technology stocks, the FANG stocks that just keep leading the market higher. So if that leadership is gone and some other sector like financials is not going to pick up the slack, then the market is also going to pull back. So to me, it starts with the Netflix earnings announcements today. And if the stock does drop $50, I think it's going to have a domino effect on the FANG stocks. They're going to pull back. If the financial sector is not going to pick up, we're going to have a pretty strong pullback, I would say, across the board. So as everybody, yet again, is extremely bullish about this stocks just going higher and higher, I think this is a great time to actually come in and buy some puts because they're cheap right now, especially this week's. The ones that expire this week, July the 17th, 18th, 19th, the 20th, July 20th puts. Okay, because for next week, if you look at Amazon, they're like almost 3 times higher because it's announced in earnings, I guess, next Thursday, right? So this is what we got. I think one of the best opportunities, just as everybody's nice and cozy and market looks happy. I think there's some incredible opportunities here to short some of these best stocks and make some huge gains. So thanks for tuning in today. Thanks for watching the video. I hope this is helpful. If you'd like to learn more how to read the charts, If you are not subscribed to the stock alerts yet, just click some of the links below this video. Take advantage of the chart course. Take advantage of some of the courses I recorded. If you're trying to learn more about trading options, I guarantee you will find them very valuable. So take action now. Make this year your best trading year ever. Thanks for watching.